Give me a sense of how much worse the news can get for not only for FTX, but for customers of FTX.
Yeah, the customers at FTX are apparently having problems getting money out, and they're going to be in the back of the line when it comes to getting their funds back ultimately when FTX finishes the bankruptcy proceedings, et cetera. So this could be a long time before any of the customers get what they put in.
Well, apparently FTX was on the heels of the headlines about this potential hack. FTX was encouraging customers not to even try to get on the platform. But given what we saw last week with Bitcoin and Ether, and again, this morning we're seeing a bit of a reversal in, investors starting to dip their toes back in the water, but it just collapsed last week. Talk to me about the contagion.
Well, the contagion it is very real. I mean, we're seeing other platforms, and there are questions about other platforms that have nothing to do with the FTX collapse. For instance, we had a situation with Crypto.com where there was a fat finger mistake, allegedly, where a few $100 million in Ether went from one account to another and then back, and some of it's missing. And this has been a continual problem in crypto, where you have these mistakes and these black swan events. And I say after a while, it becomes that crypto is becoming a flock of black swans. And the white swan event is actually the rarity, it feels.
When you're covering this industry with a microscope, do you anticipate that there will be a real freeze in the enthusiasm for cryptocurrency?
Yeah, there was a lot of smart money, supposedly smart money, that went into FTX. FTX was supposed to be the exception to the rule, if you will, that this was finally a smart guy who amassed billions of dollars in assets and was trading things above and beyond what everyone else knew. And ultimately, what it showed was that the smart money wasn't as smart as we thought they were. They didn't do their due diligence. They didn't look at corporate governance. They didn't look at management. They just trusted a little too much. And the funny thing of crypto, of course, is don't trust. It's a trustless system. And here we are in a situation now where smart money and Wall Street and also retail investors who look at this, and they're pounded constantly with bad headline after bad headline for years. We're not going to see a crypto winter. We might see a crypto ice age.
So Crypto.com and Binance are among the companies that are now trying their best to reassure customers that they have the liquidity to back up their liability, that they're okay. Fat finger mistakes aside, I use air quotes around that if you're listening on the radio. But at the same time, the guy who sort of started this drama with FTX, the CEO of Binance, is now saying that he is supportive of stable regulation, predictable regulation. Isn't that a bit of a turnabout for him?
He wasn't a big fan of some legislation that Sam Bankman-Fried was proposing or supporting because of, in many effects, its regulation of DeFi, for instance. But I think ultimately what we're going to see is not just, well, first of all, I should say that a lot of centralized exchanges do like regulation. And we saw that with Coinbase and FTX before the collapse. They said, hey, will
regulation be on an accelerator now because of this meltdown?
It depends on how Congress shapes, right? Because now we have questions about who's going to control Congress. The interesting thing, Sam Bankman-Fried was a big donor to the Democrats, and he also educated a lot of the senators about crypto. A lot of these guys say, we learned more about crypto from Sam Bankman-Fried than from other people.